Hello, everyone, and welcome to Momentum Channel. Today, we're going to be talking about 4 high-quality exchange-traded funds that allow you to invest in high-growth US stocks through Vanguard at a low fee. These 4 ETFs are handpicked. They are giving you exposure to large cap sized companies, and their 10 years annualized returns are actually quite impressive. So let's get into this video and walk through these 4 ETFs one at a time. The very first ETF for us to recommend is Vanguard Mega Cap Growth ETF with ticker symbol MGK. MGK seeks to track the performance of the US Mega Cap Growth Index and employs a passively managed full replication approach. It has an expense ratio of only 0.07%, which is quite decent. What this expense ratio provides is that if you invest $10,000 into MGK, in 1 year, you would be paying a fee of roughly about $7 in fee, which is quite low and decent. Let us take a look at some additional inputs. The last market price for MGK was at $228.12. And in the last trading day, it was up by 37 cents per share. From a risk potential, MGK has a risk rating of 4, hovering a little bit closer to higher risk range and spectrum. We're going to take a look at the performance of MGK in a moment, but before doing so, let's take a look at the portfolio composition. What type of companies this ETF invests in? You notice there are 109 different stocks underlining the MGK, and MGK has a fund total net assets of $14.4 billion. In terms of exposure, to different sectors, the largest exposure is to technology sector with close to 54%, followed by consumer discretionary at about 26%, and industrials with close to 9% exposure. The top 10 largest holdings for MGK includes companies such as Apple, Microsoft, Alphabet, Amazon, Tesla, Meta Platforms, Nvidia, Home Depot, Visa, and MasterCard. And these 10 holdings account for about 60% of the fund total net assets, which is quite significant. You get a lot of high exposure to these companies, which is why perhaps the technology sector is the largest exposure by sector, over 53% exposure that you noticed just now. We're going to go ahead and take a look at the price and performance of MGK. First things first, let us take a look at the annualized return for this fund. The 1-year annualized return for MGK based on the market price is shown to be at 18.69%. This is as of end of January of 2022. 3-year annualized return is at 27.86%. 5-year annualized return of 22.5%, and 10-year annualized return of 18%. Just remarkable annualized return over these long period of times. The reason we are interested in looking at these returns over longer period of time is that we want to take out some of those years that perhaps maybe 1 year the stock market is really well. Over 10-year time frame is a longer time horizon, and really allows you to assess better how this fund has been performing. And if you look at the return since inception, even longer time frame, we are seeing an annualized return of 13.2%. The inception date for MGK goes back to December of 2007, closer to 14 years plus that this fund has been around. There you have it in terms of that return for us to take a look at. We talked about the fee. Let us take a look at this distributions. This fund does pay its distribution on a quarterly basis, and you notice the amounts vary slightly by different quarters. The last time that the funds paid its distributions goes back to end of December of last year, whereby roughly about 28 cents was paid per share. With that out of the way, let's take a look at our second pick. This is Vanguard Russell 1000 Growth ETF. Here, you are getting exposure to Russell 1000 Growth Index and trying to mimic that, and seeks to closely track the index's return. For VONG, the expense ratio is at 0.08%. Let us take a look at some additional details. The yield we are looking is very low. It's not the largest in terms of the distribution yield, only at 0.62%. Keep in mind here, you are really more so interested in the long-term growth and appreciation of your investments, not necessarily looking after a lot of growth in terms of this distribution. That's where your focus is. Market price, the last trading price for VONG was at $69.12. It has a similar risk rating at level 4 to that of the MGK that we talked about earlier on. We have 505 different stocks as part of VONG. In terms of the total net assets, we're looking at $12 billion. Portfolio composition gives you the highest exposure to technology with 49.2%, followed by consumer discretionary at 21.8%, and industrials with close to 12% exposure. These are the top 3 exposure by sector. And the top 10 holdings are a lot of similar names. We have Apple, Microsoft, Alphabet, Amazon, Tesla, Meta Platform, NVIDIA, Home Depot, Visa, and MasterCard. And these top 10 holdings account for 49% of your total net assets. So a large proportion of your holdings are in these 10, as opposed to the 505 different stocks that this fund has underlying it. Let us take a look at the price and performance. In particular, we're interested in the performance over the past 1, 3, 5, and 10 years. Based on the market price for VONG, the 1-year annual return is actually at 17.5%. The 3-year annualized return is at 26.3%. 5-year annualized return is at 22.2%. And 10 years annualized return is at close to 18%. And the return since inception is at 17.7%. The inception date for VONG goes back to the September 20th, 2010. Our third pick here from Vanguard ETFs, giving you exposure to high growth US stocks, is Vanguard S&P 500 Growth ETF, the ticker symbol VOOG. All of these ETFs that we're talking about are available in US dollars. VOOG invests in stocks in the Standard & Poor's 500 Growth Index, which composes of growth companies in the S&P 500 and focuses on closely tracking the index's return. It offers high potential for investment growth, and it is more appropriate for long-term goals where your money growth is essential and not necessarily too much focus on the yield, because the 30-day SEC yield as of end of January is only at 0.59%. Definitely not the highest yield to bang on for in terms of the just passive distribution income. You're more so interested in growth of your core investments through long-term growth. The risk rating is similar to the other 2 ETFs we've talked about so far at the rating of 4. And the fee is slightly higher. We have an expense ratio of 0.10%. Looking at the composition of this fund, the highest exposure is to information technology sector with 44% exposure, followed by consumer discretionary is at 16.8 and communication services at 13.10. Closely after, you have exposure to healthcare at close to 11% exposure. Top 10 holdings include Apple, Microsoft, Alphabet, Amazon, Tesla, Meta Platform, NVIDIA, Home Depot, Adobe, and Netflix, a lot of similar names. And here, these top 10 companies account for 55% of the total net assets, which accounts for $8 billion in total. And here we are looking at 304 different companies that are part of the VOOG fund, this ETF. Well, let's take a look at the performance of this fund over the past several timeframes. The 1-year return is at 21.5% based on the ETF market price. 3-year annualized return is at 25.2. 5-year annualized return is double digit at 21.1%, and 10-year annualized return is at 17.6%. Remarkable returns, definitely over the past 10 years. The return since inception, which goes back to September 7th of 2010, is at 17.7%. And our last pick for high growth ETF to give exposure to US stocks is Vanguard growth ETF. All of these ETFs, keep in mind, are giving you exposure to large size companies. That's our focus for this video. We are kind of taking out and filtering out exposure to companies in mid-size or small size. This is mainly focusing on large size companies in the US stock. Vanguard growth ETF, the ticker symbol VOOG, actually has the exposure to the performance of US large cap growth index, and it provides a convenient way to match the performance of many of the nation's largest growth stocks. It has an expense ratio of only at 0.04%, the lowest fee of all of the 4 ETFs that we've looked at so far, and it has the 30-day SEC yield of only 0.43%. It has a similar risk rating at 4. For this ETF, we are looking at 279 different stocks that form it, and the top 10 holdings include Apple, Microsoft, Alphabet, Amazon, Tesla, Meta Platforms, Nvidia, Home Depot, Visa, and MasterCard. A lot of similar names to that of the first 2 ETFs that we talked about. These top 10 holdings account for roughly half of the total net assets. Your highest exposure by sector breakdown is to technology with 50% exposure, followed by consumer discretionary at 24% and industrials at about 11% exposure. In terms of the price return for VOOG, you're looking at the 1-year return of 16.5%, 26.6% annualized return for the past 3 years. In terms of the past 5 years, you're looking at 21.5%, and the past 10 years, you're looking at 17.4% annualized return based on the ETF market price. But these are our top 4 picks for investing in US stocks, large cap size companies that are geared towards high growth. We have them here listed on the list as well, just in terms of tabular format to quickly be able to compare them to each other and see where things are at. The SEC yields are shown here, the returns are shown here, and the last trading price for each one of these ETFs and their expense ratio. I hope you found this video beneficial and you gained something of value from it. If you did, give this video a thumbs up and share it with someone who might benefit from the video as well. By the way, what type of ETFs are you currently investing in? Let us know in the comment section down below. And don't forget to subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, whether it's investing in the stock market, cryptocurrency, and real estate, as well as ways to reach financial freedom. Thank you, and I hope to see you next time.